Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're asking the question, where did all the CEOs go? Ultimately, we're trying to get to why did hundreds, if not thousands of CEOs resign just before the world started going absolutely crazy? Obviously, this is bigger than cannabis. There's a lot of CEOs that have left in the cannabis space as well. Canopy being one of the bigger ones, MedMen most recently, 48 North, Green Growth, Aurora left in February. It's a long list, but this is a bigger issue than just cannabis. So we're going to kind of widen the scope here and dive into just asking the overall question, like what happened to all of these CEOs right before the shit hit the fan? Right off the bat, you know where I'm going with this. We look through the lens of finance in this podcast. So obviously this is all about money. I'm going to come off right out the gate and say that this is about money. This is about them knowing beforehand what's going to happen and leaving. So you can quit and then collect, your shares. You can sell it as a non-insider once you leave the company. So I think a lot of them did. They did just that. They left at the beginning of the year knowing that it was going to be difficult, not wanting to be on phone calls and conferences and have a crisis management 24/7. It was easier for them to just hunker down, worry about themselves and their families, sell the stock, do what they want to do, and run. So they already got their cash and they were done. So that's my take on it. We'll broaden the scope a little bit and talk about it in the larger context. But I think we can all agree that there was a witness to a very large exodus of corporate CEOs, one that we haven't really seen before. One financial publication used the phrase the great CEO exodus. And then CNBC last November said that chief executives were leaving at a record number that year, with more than 1,332 stepping aside in the period from January through the end of October 2019. So at that point, the shit hadn't hit the fan. So the quote said that it's usual for companies to leave in the middle of a recession, but not in the midst of a robust corporate earnings and record stock prices at all-time highs. And yet, last month being February, there was 172 chief executives that left their jobs, according to the executive placement firm Challenger, Gray and Christmas. It's the highest monthly number on record, and the year-to-date total outpaces even the wave of executives that exited during the financial crisis. So by the end of the year 2019, an all-time record high 1,480 CEOs had left their posts. A lot of that reporting kind of went over people's heads. They were still kind of looking at corporate profits that were going up. Stock market was setting all-time highs. And of course, we had reported on leading economic indicators that were showing a lot of signs that the economy was breaking down, talking about vice stocks and how to invest in cannabis stocks, with that eventuality that there would be a correction with an inverse relationship in cannabis stocks. Talked about that a lot. But most weren't really forecasting an imminent recession. Most weren't looking at all of these CEOs just bailing so that they could get their own cashola. And so you can see some of the CEOs that stepped down in 2019, big names from Boeing, Google, McDonald's, Wells Fargo, Kraft, Best Buy, MetLife, eBay, Nike. That was just the beginning of it, though. 2019 was just the first beginning. 2019 had its own wave, too. So in January of 2020, there was 219 CEOs that stepped down that month. So by then it was starting to become clear that the coronavirus was ripping through China, could potentially become a major global pandemic. And obviously understanding that pattern of why companies or, CEOs were leaving their companies was to get out of the way, knowing that there wasn't a whole lot you could do when governments were literally shutting down companies, not able to work. So you've got jersey companies, companies that make Major League Baseball jerseys now making face masks. You have Nike making face masks. All of these things that during a critical pandemic, you're going to have to really shift gears. And a lot of these CEOs were just in it for the money. And that's what a lot of that stock buybacks were. The price to earnings can be adjusted, and a lot of these CEOs had their commissions based on the price to earnings. So it's one of the easiest metrics to manipulate. So if you can go out in the market and buy your stock back, your earnings per share can be affected. You're seeing a lot of pushback with Boeing, for example. They spent $60 billion on stock buybacks when the market was at an all-time high. And that was really just for executive bonuses. So by reducing the number of shares outstanding, you're going to increase the earnings per share. And price to earnings is going to be one of those metrics that get them their bonuses that they wanted. So not really looking out for the company, obviously not having cash on hand, and now looking for as much as $100 billion for potential bailout. So a lot of these companies weren't acting in a fiduciary duty, and will probably end up getting some of those bonuses clawed back, but we'll find out. 2020, you saw Disney's CEO left IBM, T-Mobile, LinkedIn. Now, I'm totally speculating on why these people left and the fact that they actually did sell out when they did. But I think if you do notice that some of these individuals are dumping billions, we've had members within the Senate do the same thing, drop a 1.7 million in the middle of the pandemic. That's insider trading. There's a rule that only passed in 2012 that made it illegal for congressmen and members of the House to trade on insider information. Before that, it was completely legal, which is just crazy that Maryland has the highest concentration of millionaires anywhere in the U.S., and that's because they're just a revolving door between politics and the corporate world. And when you look at Nancy Pelosi, and regardless of what side of the aisle you're on, she's worth $100 or $300 million or something, which is crazy. That these are the people that we have representing us, or multimillionaires and billionaires. So these CEOs are no different. But between lobbyists, that's really just the linchpin between government and corporate America. So you've got top corporate executives dumping billions of dollars worth of shares in their own companies just before the market completely cratered, according to the Wall Street Journal. I really don't see that as a coincidence. Top executives at U.S. traded companies sold a total roughly $9.2 billion in shares of their own company's stock between the start of February and the end of last week. A lot of these CEOs probably just wanted a cushy job. The last 10 years being the longest bull market in history was really easy for a lot of these CEOs. So they just kind of sat back and were hanging out. I think the average term for CEOs 3 to 4 years, which is really hard to lead a company, which made it all the more easy to recognize a pattern of looking for financial incentives like buying stock back, is because if you don't really care about the long-term health of the company because you're not going to be there, what does it matter? You just go for the quickest way to make your bonus and get out. It's a low-hanging fruit. Very selfish, but when your incentives are tied to those metrics, being a human being, that makes sense to me that they would go after that, whether it was right or wrong. Nobody held them accountable. That's really up to shareholders and board of directors and the SEC, but they're all in cahoots. In the space of a week, the retail landscape has changed from being fairly normalized to being absolutely disrupted beyond what we've ever seen before outside the Second World War, according to a managed director at Global Data Retail, showing here a timeline of retail closures. Bloomberg's asking what happens to billions in rent owed for businesses that have been closed, and that if the government doesn't step in any form of fashion, it could get ugly. They need to respond quickly. That's really just kind of a call to action for REITs or real estate investment trusts that probably should just let capitalism do its thing and have those shareholders get wiped out. That's just the gamble for being publicly traded. A lot of the issue with commercial real estate is commoditizing it, making actually your home too. With residential real estate, it shouldn't even be legal, in my opinion, to have a residential real estate investment trust, because that commoditizes our housing. It makes it more expensive when it should be more of a national security. It used to be not that long ago that we didn't even allow foreigners to buy land to manipulate or affect the housing price, and now we just let any investor speculate on it. So I think hopefully real estate investment trusts will change and housing will come down as a result. But we do have more than 47,000 commercial retail stores across the U.S. shutting their doors, a lot of those not paying rent. And back to the CEOs, Jeff Bezos was one of the larger sellers who apparently sold 3.4 billion in Amazon shares the first week of February. All in all, a lot of these CEOs potentially saved up to about 1.9 billion. Wall Street executives also sold large dollar amounts, including Lawrence Fink, that's the CEO of BlackRock, who sold 25 million in the company's shares on February 14th, pre-exempted potential losses of more than 9.3 million. And then the CEO of IHS, a data analytics firm, sold 47 million of his shares around February 19th, saving about 19.2 million. And so while corporate buybacks soared, insider trading hit a 20-year all-time high as there was a report in September that summarized that companies issued record amounts of debt, that companies used the debt to repurchase record amounts of stock, and insiders sold a record amount of stock to their own company, even as retail investors were buying everything with S&P at all-time highs. The unemployment numbers just came out last week, 3 million. That's a lot. I expect a lot of bankruptcies to happen, probably even looking at nationalizing certain industries. The airline industry, for example, they're entirely hit. Huge bailouts for hotels. First time ever that all of Las Vegas has been shut down, hotels and casinos. So the automotive industry, I would expect helicopter money to be coming out. That's kind of a term when they just start writing checks for everybody for everything, which could just kind of collapse the dollar. The dollar is only backed by the full faith and credit. So not being backed by gold presents an issue. When you start printing too much, it devalues it, it takes away your purchasing power. And so when you have to bail out the hotels and all of the airlines and maybe even student loans and the automobiles and everything, it starts to devalue your currency. So I would expect more bankruptcies. I'd also expect maybe some changes to the way that the Federal Reserve handles the money of currency. It may stop becoming a fiat currency. It may become somewhat coupled or tied back to gold somehow with their own system similar to fractional reserve, where they just keep a small fraction of gold on hand representing, that dollar, something similar to silver notes that used to be in circulation. Either way, I think that the US dollar as a world reserve currency is going to come to an end as they just keep printing. A lot of countries are ditching their treasury notes, bills, and bonds, as well as repatriating their gold. So it used to be that the US would house that for safety, and now all of these countries want their gold back. So, really kind of signaling a lot of movement and change and trust in the world. Currencies are fluctuating dramatically. And while that may seem like the dollar is getting stronger, really all these other currencies are getting weaker. And eventually that whole fiat system is going to fail. It fails every single time. Generally, every 40 years, the US dollar being the longest one to survive, about 50% longer than that. But that's only a matter of time. But with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.